Hi, and Happy New Year. Welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. For anyone new to the show, I start out with a lesson in technical analysis. Today, I'm going to go into MACD, and I want to show something specific relative to MACD, especially in the relationship of the zero line and how important that is to me, how I use it in multiple time frames, and how it can really help you get in at the end of a correction. And it can be used in any time frame that you'd like. I'm going to show kind of a longer term play and then an intermediate term play, just a couple of examples. Once we go through the details of that, I am going to go through the individual stock requests that came through. I also want to talk about where we're going this year, how things are starting out, and the best way to maybe prepare yourself for 2024. So let's go ahead and get going with the lesson. Okay, I've got my grid up in ACP with 4 time frames: monthly, weekly, daily, and hourly. I'm going to focus in on the monthly and the weekly to start on the URA. And what I'm trying to point out here is we can use the MACD and its zero line. That's the zero line right here. Let me just actually expand this chart so we can see it a little bit more clearly. This is the zero line, all right? And that represents where the 12 exponential moving average is crossing the 26 exponential moving average in whatever time frame that you're talking about. So if we get a move of MACD crossing up or crossing down, that means that the 12 is crossing the 26, all right? So it's a moving average crossover using exponential moving averages, which is not, it doesn't happen all that often. When you go back and look, you can see how the signals are just, they're not that, they're pretty rare, frankly, especially when you go to a weekly chart. So I'm always on the lookout for any moves as we cross this key line. If we cross above that, we want to be on the lookout for any of the signals from my course or from my book. But there's a second way that we can use the zero line, and that's when we make a big move to the upside and we get very extended away. We want to be hesitant, a lot more cautious about doing any buying after we've made an extended move where the MACD line is extended away from the zero line. And we can see price extended away from the moving average as well. But then what happens is we go through this long consolidation phase and correct. And what was really extended away from the zero line works its way back down closer to the zero line. Now, once this gets into the region where we're getting close, we can then go down to the smaller time frame, as long as there's not a lot of damage done to this chart. Now, if you notice the way this has worked its way down, it's been pretty orderly, and price has been pretty orderly. It's below the 18, but it's still above a rising 40. And also notice how the green DI, which is the strength of the buyers, stayed above the red throughout this entire corrective period. This is like several years on a monthly chart, and we don't get the green to cross back over. We don't show any real strength in the sellers. That's the red line. So it's nice to be able to look down and see the ADX and use that in conjunction with the MACD. But I do want to just focus in on the MACD here. And as this is approaching, let's just see, even when we get into March, April, May, we want to start looking at the lower time frame as this is starting to come down and appear to find support. Now, at that point on the weekly chart, we don't have anything going on. I mean, we're clearly below the zero line on this chart. All right, so we're above the zero line on the monthly, and we're correcting back to it. But on this time frame, we're below the zero line. We get one cross to the upside here, which was early in the year, that didn't have any. It wasn't able to hold the moving averages and turn back up. All right, it just kind of went up and then gave it all back and went right back down below. So there really wasn't any of my signals that developed here. But notice the second time. Remember, we were talking about March, April, May, right? And that's right in here during this decline. That's where the monthly MACD was starting to get close to the zero line. If we watch and see what happens here, look at what takes place. We get a zero line cross to the upside, and then we get a nice pinch play pullback to the moving averages that holds and then turns back to the upside. So right in this 22 and a half area, we have a really solid 2 time frame approach where the zero line on 1 time frame is acting as support, and the zero line here is offering its first signal, first cross to the upside, where we hold and show a solid signal back to the upside after crossing back above that zero level. All right, so this is a great combination to be on the lookout for, something that I highlighted for my subscribers. And in fact, let's give another example, another stock that I highlighted and the reasons why. So in fact, let's start with the weekly this time, because if you notice, we had a pretty nice move to the upside. We make a bottom, we make a pretty strong move to the upside. We get the MACD a little bit too far away from the zero line here. And then we go through this corrective phase and we get all the way back down to the zero line now, right? So this is right here in October, November timeframe. So if we go and look at what was taking place on the daily chart, October, November, we get the same situation to take place where we're below the zero line. We get a cross, an intermittent cross that doesn't really follow through. And then we get a really nice move to the upside with, again, basically a pinch play pattern, but we make a clear higher pivot low where both lines are above the zero line. So this is essentially the first real signal that we're getting on a MACD basis after it's crossing back above the zero line. Now, again, this is taking place in the area. So we want to be watching what's going on right in here, because this is where on the weekly chart, we're approaching support on the MACD zero line. This is a huge way to help you identify what stocks have the potential to turn and start a new, pretty dynamic leg to the upside. Let's go ahead and get into the individual symbols now. If you're enjoying the content, hit that like button and also subscribe. So my research can be found at rabilstockresearch.com. Also, my school, my trading school, can be found there as well. You can get the link and find out more information about the 2 courses that are currently in the school. And I'm adding a third here sometime over the next few months. I'm working and putting that together right now. If you have an interest in getting started, though, you might want to just start with the book. I'm offering at a discount right now. You can go to rabilstockresearch.com/book for more information. As we start the new year, I wanted to start and take a look at this DIA, the Dow Jones ETF, basically because I think it's the best looking of the big indexes. I love this pattern that's developed, and I want to explain why. So if we look at the monthly chart, we've got this low ADX condition that's in place. You see how the ADX, and in fact, really for the last 2 years, all three, both the DI lines and the ADX line have all been below 25. All right. Now, while that's been happening, the MACD has been kind of working its way down closer to the zero line and then kind of working sideways as the moving averages came together. You see how these were pretty far apart here, and then they worked their way together here. So we've got this situation where we've got a low ADX pattern on the monthly chart where the MACD has been hovering above the zero line, and now the moving averages have come together. And if we look at the pattern itself, you can see it's a pretty nice little saucer pattern that has set up after touching both the 18 and the 40-month moving average. Now, if we take a look at what's going on the weekly chart, look at the ADX on this time frame. So we had from basically 2021 until now, we've had a low ADX condition in place on the monthly. Since the end of 2022, we've had a low ADX condition on the weekly chart. And then look at the way this is starting out. It really was the end of last year that things got going. You see how this ADX is now crossing above 25 based on the green DI, based on the buyers. So we've got this 2 time frame ADX condition in place. I mean, it doesn't hurt that the MACD is bouncing off the zero line again and showing strength and breaking out and confirming the price action. It is a really nice looking basing pattern that we're breaking out of. But what I'm mainly pointing out here is when you have low ADX in 2 consecutive time frames, you wait for the lower time frame to start to kick in. And once it does, you want to buy the first pullback. So we should be on the lookout for a pullback in the DIA. Now, here's what I'll tell you. If you go and look at the stocks inside the DIA, there are several stocks that are looking really attractive. In fact, let's just, I'm going to switch this list so you can see. If we look on the right, I mean, so Apple is actually starting to correct. It makes sense, right? But Amgen just broke out. Look at American Express, the move that it made to end the year, the strength that it has coming up. Look at what Boeing has done. It's starting to pull back after a very powerful move to finish the year. Caterpillar is showing a lot of strength. CRM maybe a little overbought, needs to pull back. Cisco not all that exciting, neither is CVX. Disney does look like it's trying to make a low, but then look at something like Goldman Sachs and Home Depot. Look at the strength of the move. Those are igniting moves. Those aren't the end of a move. That's the beginning of one. HON, it started to pull back a little harshly yesterday, but it has made a very strong move off the low. It looks like, again, the start of something. IBM's breaking out of a massive base. So I wanted to just point this out very briefly just to show that there's just a lot of improvement. And the interesting thing is it's in a lot of the stocks that didn't do anything last year. So those are the ones I'd probably be on the watch for, are those big breakout patterns showing a lot of new momentum. All right, let's look at the QQQ. I do think this is important. We look at, I'm going to talk about Apple in a minute. But look at the way this has played out. It finished off the year essentially, trying to break to a new high after a big run to the upside. I mean, that's just your classic breakout from an overbought condition, and we're paying the price as we enter into the new year. Breaking the 4MA, you see how this 4MA is kind of rolling over, and we've got all this, we've got this air pocket. So we've got some room for this to come in over the next few weeks. And I think that might be how this wants to play out, especially when you start to look at some of the individual stocks like Apple that played such a big role. Now, I don't know, when I start to look at stocks like Microsoft and Google and that kind of thing, they don't look as bad to me. But in the near term, I do think Apple might have a little bit of risk to it. Let's take a look at this IWM, because this is the one I was talking about late last year, how we're starting to show improvement on a relative basis. We've essentially broken this downtrend line, but we haven't really shifted the trend based on the moving average. I want to see that improvement. And what it's going to take is for this level, this 200 level, to be taken out again. I think if we can make a higher low here, we don't want it to come down too far, but we can come down a little bit more and we turn back up and get back up through 200. I think we'd have to have a lot of respect for that. And it's something I'm definitely on the lookout for, especially if we see this line turning back up and hitting another new high. We want to see confirmation on a relative basis for sure. So just something to be on the lookout for. But I do like it when we go from a new low swing. You can see we went to a new low and then we immediately ran up to a new high. So this is a bull alert. And now we're pulling back. If we make a higher low and then make a higher high, you have to think that the trend has shifted back to the upside. As long as that's confirmed by the relative strength line, I think we'd have to have a lot of respect for that. And I think that would improve the overall conditions of the market. All right, I've been alluding to Apple a little bit, but look at the way this has played out. I don't like the way this is starting the year. There were a couple things that happened to end the year. So we had a nice run to the upside with good momentum conditions, kind of broke out of that level. And then we corrected and then abruptly tried to go out to a new high. And it actually did hit a new high, hit the big round number at 200. All right. But look at what the ADX did on this move. So we have strong ADX confirmation on a move to the upside. We correct, and then we make another move. And sometimes when it's abrupt like this, you're not going to get confirmation on an ADX basis, and it's telling you something. It's telling you this did not do enough work in the consolidation phase to set up another leg to the upside. So we hit our head on this big round number at 200. And now we're paying the price as we start the new year. I wouldn't be surprised to see the MACD break its signal line, come back down and make a double bottom here. But we're doing, I think what we want, I think what we should expect is some kind of consolidation to take place. I'm not necessarily looking for this to fall apart, all right? But, you know, just for this to come down and consolidate and work sideways, you're going to start to see, the main point I wanted to make here is look at what's going on with the relative strength line. We want to avoid these big stocks when they're doing this, right? This is not a good sign when we break our trend line on a relative basis. This is not a leadership stock right now. It's starting out the year as an underperformer, and until that changes, and essentially to change it, we're going to need to break the downtrend line now. We've got a new trend line in place. We're going to need to see improvement on a relative basis before I would have a whole lot of interest in this. It could be a pretty big waste of time over the course of the first 6 months of this year, potentially. All right, let's look at Tesla, because Tesla's a little bit different. When you look at it on a relative basis, it hadn't emerged yet again, right? It was trying to turn the corner, but we hadn't really turned to a point. And this is the area that I was looking at. If we look at this trend line break, and then we look at this here, this is the 3, right? 1 is the break of the trend line, 2 is this test, and 3 would be taking out 300 to the upside. If we take out 300, we complete the 3 and we start a trend to the upside. Well, I want to see that happen on a relative basis too, okay? Now, what I do like about this situation is the fact that the monthly chart, the 18-month, was declining and is now starting to flatten out and sort of turn around. I like how this MACD is cupping around at the 0 line. And I do like the fact that there's really not a lot of strength in the sellers. Okay, so there's a lot of good things taking place here. It's just a little early for my liking. I really want to see a little bit more strength to the upside. The one time it really tried to get going here, it kind of had a little gap and reversal pattern and wasn't able to sustain anything, and we didn't get a breakout out of green DI on the daily chart. So these are the kind of things you want to be on the lookout for as this is turning back up to the upside. I think if we can take out this prior high here, which is around 264, 265, then we have a pretty good shot that I think we're going to go ahead and take an assault on the 300 level and maybe even break through there. Okay, let's look at a couple other requests that came through. So DINO. When we look at this from an energy standpoint, this is an E&P company. It's on a smaller, I think it's a little bit smaller size market cap wise, 12 billion. It's not that small. It's on the smaller end of maybe mid cap, whatever you want to call it. So if you look at the way this is set up, we made a pretty good move to the upside, and now we're consolidating, and we still have a rising 18 and 40 on the monthly chart. All right, so that is a pretty good setup. On the weekly, we're kind of waving around with sideways moving averages as the MACD works its way back down towards the 0 line. I think this is a pretty healthy look, especially based on the fact that there's no sign of real selling strength right now. So I think I'm somewhat encouraged by what's taking place here, especially based on the fact that a lot of energy stocks have kind of been hit here recently. I think what I'd be looking for, though, is a move up through 60. I think that would be kind of a key level. We've banged our head against it a couple times. Because we still have a flat 18, I think I'm looking for a little bit more confirmation, but I think if we can get it through 60 again, we'll get the confirmation of MACD turning up and probably get green DI to break out as well. And I think if we have that, then I'd probably want to play it. Now, I don't have a problem if you want to kind of jump the gun a little bit and try and play this coming up through maybe 57.5 and play it as a little bit of a probe trade, because I do think the 60 level is important. So depending on how you want to handle it, if you manage the risk and you can take a position here with tighter risk. You might get stopped out and then have to wait for something a little bit more significant, but it's definitely one you want to keep on your watch list for sure. Okay, so I got this question really to end the year, and I wasn't going to do another video, but so the question was, is this a trigger, this trend line break here? So if we look at the overall pattern, we had the 18s on the monthly successfully hold, turning up on the 0 line on the on the MACD. Look at how we came down to the 0 line and then showed this big, strong move. Let's look at this a little bit closer. Massive, huge up bar, and then we consolidate back and form a pinch play after testing the 0 line. Green definitely looks like it's in command, and we get a pinch play set up on the weekly chart. Now, if we go down to the daily, the question was, based on this is out of my course, is this a trigger 1? And I would consider it a trigger 1. We did make a lower high and a lower low, so we can draw on our trend line. We're holding the 0 line. Green is holding above red. Now, we don't necessarily have a low ADX condition to the degree where we're below both, but we are below 25, and we can clearly see that we've worked off the overbought condition in the ADX as well. I like also taking a quick peek at the volume pattern. I think this is pretty good. Not a lot of hard selling volume, despite the fact that we had a decent decline here. So the answer to the question is yes, I would consider this a trigger coming up through. You don't have to wait for the close. You can do it the moment it happens. Now, based on the way I use stops, and I tell my subscribers as each week as we're going through the individual stocks, I prefer, it's not, you don't have to do it this way, but this is the way I prefer it. If I'm going to enter here on a trigger 1, I want my stop, which is I'm using an ATR based stop. I'm using 2 times the ATR, and I want to make sure using that the stop is going to be below that. And in this case, it would have been. In fact, I think it would actually given you a lot of room based on the way the stop worked and the fact that this is a very volatile stock. I think your stop would have been below here, and so you might have entered, and you'd have to be living through this. Okay, you'd have to be living through this consolidation pattern and waiting. I typically will give a stock a chance. The fact that this has come back down through the signal line, but still above 0, I still think there's a chance this can turn back up and participate. The one thing that is bothering me about this stock is if you start to look at some of the other computer services stocks, they've already broken out and kind of taken off. The leaders are already really strong, hitting new highs, and showing a lot of strength. So that's kind of the one negative about this one at this point. But yeah, I think that does qualify as a signal. All right, I do want to go through and take a quick peek at what areas that I think look the most attractive as we move into this new year. Number one, I would say, is looking at the materials sector. All right. First of all, look at what this monthly MACD is doing. You see this pattern? Is this the same pattern we were talking about in the lesson, essentially, where we got the 0 line correction, where the moving averages have just come together, and look at the way the MACD is starting to kick in. If we can make a higher low here and turn back up, there's a very good chance we're going to break out of this sort of ascending triangle pattern. And so this is an area I'm definitely watching. If you go and look at some of the individual stocks inside of the XLB, which I do each week, I can tell you that there are a lot of attractive patterns developing, definitely something to be on the lookout for. Now, this is probably my favorite sector right now in terms of the way things are developing. Again, look at the MACD. Look at this corrective pattern that took 2 years for the 0 line. Overbought, worked its all the way down. We got the 2 moving averages together. We found support at the 0 line, and we're turning up. And not only are we turning up with a vengeance. And look at the strength of the green DI. First time we've seen green DI on this chart. This is the highest level the green DI has been. The buyers are very strong here. What's kind of missing is a little bit of a check back. We've got some stocks in the banking area and some of the other areas in the financial area as well that I would be watching for a minor pullback in. And I think we'll get that at some point here this month. But I would be looking to take advantage of that, assuming it comes in an orderly fashion. We don't get really violent selling, but definitely an attractive look when you go and you look at that monthly, weekly combination in MACD and in ADX. Okay, XLI, I do want to bring this up. Now, this actually there were a lot of stocks inside of the industrial sector that had a really good year last year, but there were also stocks in areas that did not. Okay, I would be focusing on those. I can give you one example would be like the railroad stocks. They didn't do anything last year, but they're starting to show signs of life, just as an example. So, You've got this pattern where we've been working sideways and we're starting to emerge out of this. I do like the relative line starting to show signs of improvement. I think if this pullback can hold 110, that would be a really good sign here. Definitely something to be on the lookout for. Okay, XLRE. Now, this is more of a turnaround play, but I do like what's going on here. We've broken the downtrend line. We kind of came back down and tested, and we've turned back up. Now, you got to be a little bit more, this is a little bit more selective area. I don't think you can just buy anything in this area, but I would be watching this specific industry, this ETF, for a higher low to form, especially in the form of a pinch play or something like that. We're getting a crossover on the monthly MACD versus a signal line. And then the last area I want to take a quick peek at has kicked off the year with a vengeance, is this healthcare area. Now, look at how long this has been correcting. Now, it didn't even make it back down to the zero line, but we're starting to show signs of life. And this is really nice price action here to end the year and to start this year. So we've got these overdone drug stocks that are way down and look like they want to bounce. Those I'm not as interested in unless you want to trade. I would be a lot more interested in taking a look at the stocks that have made these dynamic moves out of these sideways consolidation patterns. There's plenty in the XLV to be on the lookout for. Thanks for watching the show today. My research can be found at rabilstockresearch.com, and my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.